What's up, Mortgage Coach community? Dave Savage, and today I'm sitting down with Garth Graham. To me, Garth is one of the most informed leaders in the mortgage industry. Garth, how many years have you been doing this now? Like forever?
32. My professional photo that I use on my LinkedIn page was only from 15 years ago. But yes, I've been in the industry 30 years.
And so anybody who knows about the picture that he's talking to know that I give him a hard time every time I talk to him, that he needs to upgrade that photo.
Exactly. And speaking of hard time, I just want to cover this really quick, Dave. Is the last time you and I communicated, we were texting during the University of North Carolina and Syracuse lacrosse game in the ACC tournament. And I just want to say how sorry I am that your son's college, Syracuse, where he is going next year, congratulations for the, his success in lacrosse, lost to Carolina. And I feel bad about that. So I just wanted to say, at least we're going to be talking about the economics of the mortgage industry, which might even make you more sick than the Syracuse loss against Carolina. So
that was tough going into the fourth quarter, being up by 3, and I think we lost by 2. That was not fun, but I was happy for your nephew.
Thank you, sir.
So I'm going to figure out how to get you back for that, but that's good. I'll think of something good. So guys, Garth, for anybody who doesn't know Garth, listen to some of our past interviews. I'll put a link down below. I'm going to assume folks know who Garth Graham with Strathmore is, just because he's on every stage in the mortgage space. So Garth, let's have a conversation just about state of the industry today.
Sure.
But why don't we start it with the performance that you want to share? Like, how did the industry perform in 2018? And then let's talk about how you think it's performing now from a Strathmore and Garth Graham perspective.
Yeah, I think actually I was here a year ago, the one that you're referring to, and I talked about at that time, and I remember you saying, wow, that the industry 1 year ago was at a 2% profit margin, meaning at the time, if you took all the revenue from retail mortgage bankers and determined what they spent their money on at the end of the year, there's 2% left. It's a 2% margin business a year ago. This year, it's a negative 13%.
So time out, not this year,
2018. 2018, right. Sorry. So 1 year later, in 2018, the industry on a independent, on retail mortgage banking lost 13% profit margin, or lost roughly 15 basis points overall. Now, that is a painful number, and that's fueling. So one of the biggest things that's happening is fueling mergers and acquisition activity. So we did, historically at Strathmore, we do roughly 2 to 3 more M&A transactions a year. And we're currently on pace of doing about 2 to 3 a month. And a lot of that is, the individuals that were struggling in 2018 looking for potential exit. Now, before you ask your next follow-up question, because I can see you jumping at the bit here, that is the perfectly valid conclusion as to what's happening in the industry effective March 15th. April or May 15th, 2 months later, it looks a lot better. And it looks a lot better because interest rates dropped, the refis picked up. So it's almost like the methadone hit to the junkies that have been hanging in there in the industry, feasting on refinances to the extent that there's those that are left. And now we have a big April and a big May. Some of April and May for some of the lenders who are our clients are literally had some of their most profitable months in years. So 2018 was very tough. 2019, we got this crazy windfall in the last 2 months that's going to drive very good profitability for Q2. Looking out past that, I'm not real sure. And I'm not real sure because of all the instability in the marketplace, geopolitical and things of that nature. So it kind of depends. Do you want me to look in the rear view mirror, or do you want me to look out the windshield? Because it's very difficult to say where we're going to go on an economic basis in 2019.
Well, how about this? So we don't know where it's going, but I mean, here's what we do know, guys. And if you're watching this, chances are you're a referral-based local mortgage pro, or you manage them. You're head of production, you're a regional. When I interview Garth, I hope you guys will forward this to your C-suite, because I think Garth brings value to every level of the mortgage industry, from the trenches in the street on up to the CEO and the head of production. So we know that it's been tight. we know that a lot of people have taken a lot of cost out of the engine.
Yep.
A lot of folks have been optimizing the customer experience through, digital platforms, CRM, POS, mortgage coach. We're trending. I mean, we're adding brands. We're seeing adoption up. When do you think lenders will really get it together? Not only have a digital tech stack, but they'll be utilizing it at a high level. Like, are we talking 5 years from now? Or are we talking like 18 months from now? Are we talking now? What do you think?
I think the lenders are beginning to spend more money on technology, and they're beginning to spend more on technology. And the primary reason that you ask them, and this is the most encouraging stat when we recently did our tech survey, was we said to the C-suite, why are you spending more money on technology? And the number one reason they said was to increase customer satisfaction. The second reason is to increase productivity and elements like that, automate workflow. The good news is just 3 to 4 years ago, when you asked that question, or when we asked that question, the answer was invariably regulation, or because I have to, not because I want to. So it was an investment from a capital expense, but it wasn't really an investment in our future. It's an investment in what we were being required to do from a regulatory climate. Now they're spending money, and that's a really good thing, on at least things that are trying to drive customer satisfaction. How to engage with consumers, how to make sure that consumers are better informed, and ultimately how to give a wow experience or super high level positive experience so that they can hopefully generate future referrals and or repeat customers and protect the referral sources. So I think I'd sort of say they're spending money for good reasons. And they're spending more reason. So I can see how, you are likely probably adding logos because people are caring about how to engage consumer. And obviously your application, you spend a lot of time doing that.
Yeah, well, I love the way you put that. And I do think the why has elevated to a level that will drive more success. And then a why that I'm seeing a lot in terms of like, why are you deploying Mortgage Coach to both your tech stack and your culture, is I think there's this more clarity that, Amazon is coming, and I don't want to, Amazon's the word, but whether that's big bank, whether that's low cost credit union, whether that's broker, it's like low cost, scalable options are here. And if if you lead a referral based local platform, you need to not only deliver this amazing customer experience that's legit, you need to outfit your mortgage professionals with the tools and the platform for them to deliver a premium solution. So I see that why. What are your thoughts on that? Like that's part of it.
Well, and I think the real opportunity, and by the way, I started, you used to refer to me as the C-suite, the consultant, et cetera. I started as a retail mortgage banker. I was a loan officer. So I was a loan officer. And this was back in the old days when you hand wrote the 1003, but this is, late 80s into the early 90s. So the good news is, if you can think about it, if you're a retail mortgage banker, the average retail mortgage banker, when I was talking about where you spend the revenue, they spend 2% on marketing. So they spend about 50% on sales. And, that sales is in the form of commissions and loan officer assistance and everything else that goes into creating a local presence. So they're not, the retail mortgage banker, they're not getting their loans really in any sort of different way than I got my loans back in the 80s and 90s. We didn't have a lot of marketing support. We had to go out and do it ourselves. The good news is if you give a salesperson good tools, digital tools, the ability to engage with customers, I think also there's, the old fashioned sales management, there's coaching, all the elements that make salespeople, able to thrive in this environment. I think that's the way that we're still going to be bringing in business, especially because we're in a market absent last month and this month. We are in a market that's 25% refi, meaning it's 75% purchase. We're in a purchase market, most important transaction they make, multiple referral sources, multiple decision makers, big important transaction, total cost analysis, and the other features that you provide are likely very important. They're not coming through direct marketing type capabilities, at least not in retail mortgage banking.
Yeah, no doubt. I think delivering that amazing educational experience it's more important than ever. If you want to be local referral based lender, or loan officer, you need to implement your technology and you need to adopt it. So what are some quick, just getting tactical, the playbook, for adopting technology? Because at Strathmore, you consult not only with a lot of M&A activity, but you consult lenders with, technology selection, with advice to drive a better adoption and success with technology. What are some of the things that you think everybody should be thinking about?
So, well, I think the biggest piece, if you're adopting a piece of technology or you're trying to create a technology roadmap, whether you're an individual loan officer, whether you're a branch, or whether you're up in the C-suite, in order to be successful, it involves people, process, and technology. It's three elements. We have seen technologies used at lenders, the identical technology one will have 4 to 5 times the adoption rate of the other. That is a people and process. There's no difference in the technology. They're identical. We've also seen consumer engagement with technology, such as whether it's a mortgage coach, whether it's a point of sale solution, or however consumers are engaging, the web page. Same technology, substantially different adoption. That's also a people and process. A person described the value of the technology, engaged the consumer, and then followed up. Maybe they got a trigger notification that the consumer engaged with the web environment or with the digital application. They picked up the phone and they called them and said, how'd you like it? And suddenly they're able to engage with the consumer and start walking them through the process. So I think the big one, and it's easy for me to say, and it's not always easy to do, but even at the loan officer level, you need to be committed to a people process analogy if you're trying to leverage technology solutions to drive better productivity or better success in your market.
Yeah, I like the way you put the difference. Like, technology is not the problem; it is the people in the process. Because the technology that's in the market today, mortgage coach, there's a number of CRMs, there are a number of POSs, in just about every category. There are awesome technologies, and some companies are really turning it into an advantage, and some companies aren't. And I would say, in a lot of cases, it starts with why. Just like we opened this call, like, why people invest in technology dictates their success, their profits, and their production.
Right.
When you roll out Mortgage Coach, the C-suites that have the most success are the ones that had, the best why. Like, they were clear on it, they were focused on it, and they put a multi-year process around it. They realized that it's not like, oh, let's kick it off, let's focus on it a quarter, and now let's go chase another shiny light. It's like, hey, we're kicking this off. We've got a 1-year training roadmap, people and process roadmap, and in many cases, it takes a couple years to really, institutionalize a platform like a CRM or like a mortgage coach. Any thoughts on how long of a roadmap and a plan they need to put in place from a training and adoption standpoint?
Well, it's certainly not an overnight. The other is, I think it needs to be iterative and constant, circular feedback. So you need to be able to continue to get feedback the more people use it. I mean, I give you credit for having, your Facebook group and your Facebook site where loan officers can give you credit and ask direct questions. And I think lenders need to adopt that as well. So you don't set it and forget it. You continue to iterate, ask questions, be open to good ideas. You have some, humility about your system is fixed and how else could help you. So as long as you're, I think, constantly innovating, and if you're sitting in the chair, using the technology, as long as you're constantly trying to improve it and make it better and improve yourself and the way in which you use the technology, then I think you can have success. You're certainly going to have people who just, struggle with that, and they don't always look in the mirror to try to find the person who can make things better, and maybe they're over reliant on the perfect technology, and we're still in the kind of a people business. So I think the best way, you had a line and I'll let you do it because I can't remember it, but bottom line is the digital loan officer is the loan officer of the future. So what's your line again? I just queued you up.
So I've done a couple of versions of it, but the way I'm saying it today is that disruptors and technology companies are not gonna, disrupt local realtors and lenders, but local lenders and realtors that master technology and media are absolutely going to take market share from those who don't. And I say it different every time I say it, but I mean, at the end of the day, it's the combination of technology and media that if you're local, referral based, and you want to make your next decade your best decade, which I actually believe it could be. I mean, we've never had more access to like best practices, wisdom, and content. We've never had more access to a tech stack that works. And so I just think that those that master it, you got your best decade ahead. It could be your most profitable and your most successful. And it all comes down to execution. You know, there's great tech out there. Everybody needs to just execute with more intention.
Yeah. And I mean, it's a purchase market too. So you're going to have to execute and be in your sharpest game with purchase. And most of your clients are probably purchase related. Most of the self-source realtors or loan officers are. But that means you've got to be very connected in the real estate community, and you got to keep a really close eye on the changes that are going on over there, because there's some substantial changes. We are ultimately, as a self-source real estate, self-source mortgage market, we are 1 million realtors or 100,000 loan officers chasing 1 million realtors who are trying to chase 6 million mortgage transactions a year. So that's your funnel. So, you need to be, and there's all sorts of speculation that the number of loan officers is likely to drop and the number of realtors is likely to drop. And that 6 million mortgage transactions is going to be flat. It's probably not going to drop, but it's not going to go up if the projections are right. So, you need to become more productive, and you need to be a survivor, because if there's less of us, you can grow your share that way. So you can grow your share, and the ones that can't, succeed in this tougher climate will likely pursue options outside of our industry. And that's okay. If there's less, realtors and less loan officers over time, it just means the, pie left over for the successful one should be even bigger. So, that's there's a little positive and a little negative in that message, but that's really the funnel. It's the 6 million, 1 million, and 100,000. That's our industry.
I like that. Write that down, guys. And then here, I would break it down. If you're a loan officer, like, net that out for you. How many transactions in your market? How many realtors are you targeting? If you're a mortgage company, everybody needs to get clear on market, realtors, loans,
referral sources,
and then get after it. So I'm going to give you one more question. I do want anybody who's watching this, Garth mentioned our Facebook group. Make sure you connect with that. Mortgage Coach Productivity Mastermind. Also our YouTube channel.
And my LinkedIn page with my nice old photo.
Yeah, well, I was going to tell you, Garth, before I ask the last question, what are the best ways people should follow you? And then, the newsletter and the marketing from Stratmore is like amazing. So anybody who's not following you, what's the best way to do it?
Well, easiest way is you type in my name and you'll find me on LinkedIn, or the Stratmore website. There's only 2 Garth Grahams I know of, and one of them is a doctor in St. Louis. That's not me. So if you find Garth Graham Mortgage, you can find me on LinkedIn or find my Stratmore Group website, and happy to engage that way. LinkedIn's usually the easiest way, because anything that we put out, we do share on LinkedIn. So it's pretty easy to connect with us that way as well.
And Garth is an incredible speaker. Anybody who's looking for a keynote, a leader of a panel, Garth is, he's one of my favorite. Garth, if you don't mind forwarding, whatever slides you want to put, like that's kind of a once or twice a year, you and I do interviews like this. So if you do have any stats and facts that you could give a PowerPoint afterwards, we would appreciate that. I will put that in both the group, and there'll be a link down below.
Sure.
So as we close, one last question. There's a lot of new blood coming in the mortgage business. What if there was a new loan officer, 25 years old, getting in the mortgage space? What's your words of wisdom for a 25-year-old or your old self getting in the business when you were 25? Any thoughts?
Well, I think the biggest one is to try to be open for training. There's a lot of good people, coaches and trainers, and it's constant. You know, it isn't like you're going to go through a training program. You're going to be trained for life and continue to have to refine it and get better and better. And I think you need to ask yourself the tough questions. We're in a tough enough market. If you have a bad month, say, what did I do? So try not to be too externally focused. You know, obviously we spent a lot of time, and I just kind of ran through the funnel, the 6 million, 1 million, 100,000. But, you know, generally for real estate and mortgage professionals, what they really need to do is just say, what do I need to do next month to be more successful than what I'm doing this month? So whether it's watching the videos like this or getting training and surrounding yourself by other successful people are all good ways to increase your success.
So guys, if you, netting that out is own your success. You are still your biggest competition. Your actions, you know, sales time, using your CRM, using Mortgage Coach, you're your own competitor. You're your own biggest competition. And then leverage the trainers, the leaders at both your own company and in the industry. And if you work hard and you follow that playbook, you'll kill it. So Garth, appreciate you, brother. If you're watching this and you got value, give us a like, share it with your mortgage friends. And Garth Graham, until next time, brother.
Thank you.